Okay, so here I am in a live trade account and I was waiting very patiently for a breakout, and then I took a trade that I've been in for a little while, but I timed it right in terms of entry. I was stuck in this kind of wedge, yeah? So waiting for the breakout. Breakouts come within the trade, and we hope now that the market is actually going to the moon. It's good volume, markets going through, and finally, after being choppy for so long, we hope now that the market has decided to take off in one specific direction. Now, for me to get clarity, because this is a lot of money on this Shiba here, you can see 31,000, and for this to for you to have some confidence about where this could be going, then what you want to do is go to a bigger time frame. So we're on a 1 minute right now. We go to 3 minutes and we see the same exact movement. So that means this is quite fresh in terms of that breakout there. So we go to 5 minutes to have an idea. You see that it's very, very similar. We go to 15 minutes and now we start to see a little bit of a picture. So the picture that we're seeing now is that this market has broken out of this particular range here, and it has a 70% chance it's broken out of all resistance areas, and it's broken trend lines as well. So this does have a 70% chance of at least going back to the top. Okay, so where would the top be? Well, you've got a resistance area here, and if I wanted to mark off that area, I could. So this is a resistance area here. You've got another one up here. So we go to a bigger time frame to see how high could this go in terms of being a 70% success rate. So it could easily come up here. Okay, so if you wanted to initiate a short-term take profit, then this would be the area. We suspect that when the market comes up here, it would then start to pull back a bit. However, it depends on the momentum behind the trade, because if it's a powerful, powerful candle as it comes up to this area, then it could just smash through. And if that's the case, we would then continue to go up the time frames, and we would then go up to the time frames to see, well, where could this actually go? So what we're going to do is we're going to zoom out, go to much, much bigger time frames to see where could this market actually go. If it was a really sincere breakout, where could this market go? We've got a couple of resistance areas here. So let's go on a daily, and we can see where could this actually go if it was going up. And you can see there's still room to go to the top. So if we're looking at the top, we're now looking right here, and that actually is the most is the all-time high. So this area is the all-time high. So this market, if it does decide that it wants to break out at any point, then it can go straight for the all-time high, and hence we have put a sell limit order half of the all-time high. So we've gone somewhere around here, this area here, which is more than half of the all-time high. And the reason for that is because if it is, you're taking a trade, you want to take a trade. So we do half, and then we can take some money off the table, then we can review our situation, look for an entry, and then take it back. If it still wants to go up more, then we would go revisit, look for an entry, and then go up to this level. And then after that, if there's still more in the tank, you can actually go even higher. So that's how we actually analyze the charts, and you're either going to be right or wrong. So if you're right, then it's going up. If you are right from this position, it's going up. If you anticipate and you create a scenario to say that's the bottom, that means this is going up and it's not going down any further. If you're wrong, then the bottom will drop out and you will lose the trade. It's that simple. So therefore, you should not be trading more than you can afford to lose. Okay, So when you're putting that kind of money on the line, you have to make sure that you can afford to lose it.